Let's start with the gold prices which have seen a bit of a slipping continuing into the markets today. $8 down on your screens. The precious metals have slipped ahead of the two-day FOMC meeting that kicks off tonight. Expectations are that the Fed will continue to roll back its QE program, and that has sapped the strength in the gold prices today. But it's the ongoing conflict between Russia and West over Ukraine that has helped put a cap to much of losses there. Take a look at the energy space, and the Brent crude is trading higher above 106 a barrel, with bargain hunting kicking in after the benchmark fell nearly $2 in the previous session, as there seemed little likelihood of a Ukraine crisis interrupting the Russian oil supplies. On your screens, we are back above 0.25% in the Indian markets as well, as we trade, or rather we mirror, the European prices. Let's get in Vijay Bhambani, who's author and CEO at BSPL India. Vijay, hi. What's your sense really coming in for energy now? Because this is one space which has rebounded quite smartly during the day.
Manisha, this is in line with what we spoke about a couple of trading sessions ago, that crude oil prices at 59.50 on the MCX look like they are overdone on the downside. And what you have seen is short covering come fresh buying taking prices higher. So effectively speaking, 59.50 may be construed as a short-term bottom. Anytime you see crude prices heading downwards, I would expect a pullback rally, possibly with the price target being 6040 to 6060 on the upside. It's actually natural gas which is showing signs of lethargy, or maybe even some profit sales on long positions. So if you wanted a pair trade, I think you would go long on crude at lower levels and go short on natural gas at higher levels.
Vijay, how would you look at the base metal space? Because while the data isn't really encouraging, but today has been a day of bargain hunting there as well. All latest Chinese data has been weaker, except for the US factory production. Those numbers are positive.
Manisha, base metals outlook hasn't really changed very dramatically. What you are seeing is short covering based upthrust for sure. But if you see the volume in open interest almost across the board, with possible exception of copper and nickel, which are showing signs of more trader participation. Also because the volumes are showing higher because you had a truncated session yesterday, so the base effect itself is lower. But there is no greed or no excessive exuberance in the price to volume and open interest correlation. Traders are merely covering their shorts rather than building up fresh long positions aggressively. I still don't see any major upthrust occurring either in aluminium or lead, zinc. Nickel itself, another 10 to 15 rupees from here is something I would possibly want to go short on. So I think the upsides are fairly calibrated. It's the downsides which are a little more prolonged on short selling.
And one place which has seen more profit taking now seeping in as we are in the European session really is the precious metal space. Remember, we started Asia, equities and currencies on a positive note and some decline in precious metals, and that is how it has continued for the European markets as well right now. Vijay, markets are of course awaiting the FOMC announcement, but that would be tomorrow. What do you think is making this market nervous today?
Manisha, like you rightly pointed out, it's the Russian action in Crimea is what is unnerving the players, and therefore there is some amount of flight to safety. There is a little bit of safe haven buying, but here again, if you talk about the MCX gold prices, the 30,450 level is still a critical short-term trend determinator. Above 30,450, even if you do see consistent trading, I think the 30,600 or 30,650 level will act as a very stiff resistance for the bulls to overcome. Where silver is concerned, you're likely to see upsides getting capped at 47,200 if at all you go there. And I would still lay off any kind of buying in the leverage space, which I have been away for over 14 months now. If at all I was to buy, I would buy silver, but at least 1,500 rupees lower from here. I'm still in no hurry to write out a check and take any kind of investment positions there.
Let's talk about sugar now, and as per the latest report from ISMA today, till 15th of March 2014, the country has produced 193.8 lakh tons of sugar. The gap between the years and the previous year sugar production as of now has been narrowed down to 17.4 lakh tons. A fortnight back, the shortfall was 11% lower, which is now reduced to 8% lower. In the second advance estimates, ISMA has estimated 238 lakh tons of sugar production, which will be 5% less than last year's actual sugar production of 251 lakh tons. From October 2013 till Feb 2014, about 100 lakh tons of sugar has been dispatched by sugar mills for sale in the domestic market, as compared to 96 lakh tons of sugar dispatched during the same period last year. Those are all the numbers that have come in from the ISMA release today. But let's get in the ISMA DG, who is Avinash Verma, and he joins us on a Delhi phone line. Avinash, I appreciate you joining us. What's your sense, first of all, on the numbers?
As you already mentioned, the production numbers seem to be on the lower side. We were expecting about 25 million tons at the beginning of the season. But now with the lower yields, more diversion into good and all, we are expecting the year's production to be about 23.8, about 12 lakh tons less than what we were expecting earlier.
Avinash, what's your sense on the numbers that have come in, sense of what the mills are selling into the domestic market and also the exports?
See, if you see the first 5 months of the current season, that is up to the end of February, the mills have dispatched almost about 10 million tons into the market, as compared to about 9.6 last year, just about a 4 lakh ton increase, which is very normal. I mean, on year, there's a very normal increase. So not a very big jump domestic sales. But the export numbers are quite encouraging, and we have exported almost about 12 lakh tons to the end of February. And I think about 3 to 4 lakh tons more of contracts have happened. And therefore, we expect that by the year end, we should export about 2 million tons by end of September.
Avinash, the price reaction has been quite favorable as well, still catching up with the kind of run-up that we saw in the international markets, but we have seen a good 8 to 9% of gains in 2014 lows from at this level. What's your sense on this sector?
See, let us remember first of all that the prices have been coming down quite though slowly, but it had come down almost by 6 to 6.5 rupees across the country per kilo. And still we have to catch up with the position that we were in August, September 2012. So we are almost still, you can say, about still 2 or 3 rupees lower as compared to our cost of production. We are still not able to recover our costs. And if you generally look, the prices have come down in the last about 12-13 months. It had to stop sometime. And with the market sentiments improving because of lower sugar production expected, and because of the surplus sugar coming down because of surplus sugar getting exported into the international market, the sentiments have improved. There is a higher buying. The summer season is around the corner, so there should be an increased demand for that also. All these combined are actually improving the market sentiments and the sugar prices.
Avinash, would you want to stick your neck out and give us some kind of a prediction on where further the prices can head?
That's a very difficult one to really answer. But now that the summer months are around the corner and the sugar cane crushing period is almost over, we generally expect the prices to improve slightly. I can't give you the numbers, but the prices should improve further on from here.
Fair point, Avinash. We'll let you go at that. Appreciate you joining us again for giving us a sense on the numbers and, of course, the price forecast as well. Vijay, on the charts, I mean, we, of course, have been talking about the sugar prices, and we are back above 3,000 rupees, as you have been mentioning. From here on, where do you see it going?
Manisha, nothing has changed from the chartical perspective. After having recommended longs at 2650 to 2700, I talked about 3000 to 3050 levels. Last week I recommended booking profits in a very staggered manner from 3050 levels and exhausting your long positions by 3100 levels. I would still stick by that based on the technical outlook. I think the run-up has been fairly solid, and I think there's no point in trying to kind of get too greedy. Let's not forget, this is an election year. Sugar is a politically sensitive commodity, and one cannot expect it to double or triple like a mid-cap stock. There will be pressure points at 3050 to 3100, and that's where I think you should take some money off the table. Although it might appear to be premature, but then it appeared premature to buy at 2700. So I would think one would start exhausting their long positions in a very staggered manner. Carrying on your long positions and paying rollover costs actually eats into your profits.
Vijay, one more thing that has taken a bullish trend today has been wheat. I mean, these are the only couple of green issues really. Apart from that, most of the agro commodities really have gone into deep profit taking today.
You're absolutely right, Manisha. And wheat has jumped in the last 15 minutes of trade. It was trading at 1690, 1695 for a fairly major part of the trading session today. It's spiked up towards the end of the session, which tells you that there are short interests which are getting squeezed. And as we head into the expiry of the March futures, which basically close out on 20th of March, you are likely to see further upsides of 15 to 20 rupees, but I think it's more of a spike up, a temporary blip on the radar, if you will, rather than a sustained upthrust. Here again, due to electoral considerations and suppressing food price inflation, there will be pressures on wheat prices also. So at 1720, 1725 kind of levels, I think I would want to call a short-term top on wheat.
Fair point. So more gains on sugar, but a short-term point, up point on wheat is what Vijay is calling it. But with that, let's go for some news then. And the Forward Market Commission has modified the matter of cash acceptance in the futures market by members from their clients. The FMC has made this decision in consultations with the national exchanges. FMC feels that acceptance of cash should be guided by the relevant provisions of the Income Tax Act and Prevention of Money Laundering Act and any other law in force in this regard. The Forward Market Commission has also decided to extend the trade timings in the future contract commodities like soy oil, soya meal, crude palm oil, RBD palmolene, cotton, kapas, cotton seed oil cake, cotton seed, and sugar and maize. Remember, most of these commodities have strong international linkages, and now the evening session has been extended till 11:30 p.m. for all of these agro commodities as well, so for a better price discovery. Also, the trade timings for these commodities will be extended, and they will be effective from 1st April 2014 onwards. This move comes in to align the domestic future prices better with international price movements. Also, all the commodity exchanges shall keep the trading platforms closed on Saturdays for all the future contracts, that is agriculture and non-agriculture, with effect from 1st April 2014 onwards. Remember, we had told you a possibility of all of this happening in the previous week, and these circulars from FMC now actually have come.